Okay, so we are there. We are at the home stretch as far as the operating budgets, right? We have made a sales budget. We've made a production budget, which has given us our direct material purchases, our direct labor budget, and our overhead budget. Those all go into calculating a unit cost, which enables us to value our finished goods inventory. Once we have that piece, we can calculate our cost of goods sold budget. And then, meanwhile, we can also generate a selling and administrative expenses budget, and all those pieces, right, the sales, the cost of goods sold, and the selling and administrative, those three pieces basically become our budgeted or pro forma income statement. These pro forma income statements are really important when business planning. If you want to go out and get a loan for new equipment or to grow your business in some way, you need to show the banks your pro formas, your budgets, what you think you're going to do, and how profitable you're going to be based on the sales and then any new capital budget items that you're going to do, which we will deal with in the next series of videos. So this is going to be the quickest one of all, I promise. Now I've let me just unhide the schedule, right? And so we are going to assume a tax rate of 40%, which, believe it or not, is pretty standard between state and federal taxes and whatnot. So now we just have to pick up all of these elements of an income statement, right? So the sales less the cost of goods sold gives you your gross margin. Subtract from that your selling and administrative expenses. That gives you your operating income. We are going to take out of this some interest expense, which we're going to calculate in a later video that has to do with cash flow issues and short-term borrowing. This will give us our income before taxes, take away taxes, and that gives us our net income. So let's go start picking up all of these items, right? So our sales, we pick up all the way from the top, from the very first schedule we made. So that's $57,000. And here I will scroll forward. There we go. Our cost of goods sold, we pick up from the one that we did more recently. There it is, budgeted cost of goods sold. That gives us our gross margin of, you know what, let's make this negative like the example shows. So then this is going to be, the gross margin is going to be these two together, 17,383. We have our selling and administrative expenses here, and again we're going to take that as a negative. So that gives us operating income as gross margin minus selling and administrative, 87.33. Our interest expense, we're going to take it as $60, and I will show you how to calculate that in a later video. That gives us an income before taxes of $8,673. Our income tax expense is going to be this 40% times our income before taxes, and again we can take that as a negative, and we can get rid of a couple of decimals. There we go. So now our net income is these two together of $5,204. So on $57,000 in sales, we had a net profit, a net income of about 10%, a little bit under 10%, which isn't bad. And as promised, this was the shortest video at all. All right, so we went through all of these schedules and how to calculate them, and then I just want to show, okay, what happens to our profit if we sell if we increase the price of our shirts by $1? Let's just see, and everything else is the same. So I can go all the way up to the beginning. I can make the price $11. Okay, now what happens to our profit? It should all flow through. Okay, so now our profit goes up to 8,600. Okay, so that's why we do these things in Excel and we make sure that everything is linked. Because if we make a change at the beginning, and believe me, this happens all the time in the real world, those senior managers will say, oh no, wait, that's right, I wanted to increase the price 50 cents. You know, and then as a financial analyst, you got to go through and see what the differential is going to be, right? Doing these in Excel makes that possible. Again, if you hand me in a spreadsheet and it has any numbers hard-coded into any of these schedules, I will give it a 0 and I will give it right back at you to redo and do correctly. There is no halfway with this kind of work. It's either right or it's wrong. Okay, next we're going to do the cash budget, which is pretty complicated, but we have gotten as far as we need to with the operating budgets at this time.